Hey there, it's Dan Ferris, editor of Extreme Value, and I'm on the road, so this video might be a little shaky, but I can't resist commenting on something I saw in the Wall Street Journal today. Apparently Spotify, in going public, is doing something quite a bit different than most other IPOs, and that something is simply to directly list the shares and let the market set the price, rather than going the traditional IPO route through an investment banker. And this, of course, has dramatically reduced the fees paid to any bankers that are involved in the transaction. And one fellow said in the Wall Street Journal article that I read that, this is a travesty because IPOs are the cornerstone of the banking business, the investment banking business. And of course, this is ridiculous. This is how capitalism works. Nobody's going to be heartbroken for investment banks. This is a good thing. It's a good thing that there's less frictional payment coming off of these transactions and going to investment banks. Whether or not this will start a trend in this type of thing, I don't know. But with a company like Uber out there that might have a big IPO to do, it's certainly an interesting topic, and I'm very, very happy to see less fees going to investment banks. What I think they're not covering, for example, in this article, is that groceries and clothing and other necessary items of life were the cornerstone of a lot of businesses that were put out of existence by Walmart and then by Amazon and other big companies. That's how capitalism works. It's a good thing, because all those companies, even the mom and pops and the the Main Street grocery stores, were basically ripping us off. They were charging way too much because they didn't have the scale to cut the price down the way Walmart and Amazon do. And this company found a way around being ripped off by an investment bank. So good for them, and good for all of us, good for the world. And let's hope that somebody finds a way to get the cost of it down even farther and farther. If you look at frictional costs in the financial industry, trading costs have plummeted. It's cheaper than ever to trade equities and other instruments, and it should be. It's all done electronically now, and it's a very much more efficient process than it ever was before, including the presence of high frequency trading and all that. It doesn't mean anything. What means something is it's much more efficient and electronically enabled, and that development too has kind of influenced the ability of a company like Spotify to be able to come in and say, we're going to skip you guys and just pay a little bit of money to banks and list our shares directly. It's a more complicated process than that if you read the article, but that's the gist of it, and I like it. It's a good thing. I'll talk to you again soon. Bye.